Okay, and welcome back, students who are taking financial accounting. In the series of videos, we are working on the Chapter 2 exercises, the Group B. And this is the second video in the series, so we're going to pick up where we left off with exercise 2-24B. These, just as an FYI, these exercises, there's a lot of making journal entries. And like I said, if you want to see the complete thought process on how to make journal entries, go back to the introductory videos on the business group under financial accounting there. There is videos on how to make journal entries when you don't know how. There is a same kind of explanation as to thought process in the videos for the introduction to accounting and bookkeeping. In chapter 1 of the financial accounting textbook and the theory videos of it, and even an explanation in the theory videos for chapter 2. So, probably the best place to go is the intro to accounting and bookkeeping, on how to make a journal entry when you don't know how. So I'm not going to explain that process going forward because even in the last video, I covered a little bit of it, when we were doing exercise 2-23B. So I'm just going to work through the journal entries and, explain what goes on in my mind, but I'm not going to keep on covering the process because, for the next, problem, I'm going to have to explain the process again and again. Now, it says here, using the steps outlined in the 5-step transaction analysis, record the following transactions in the general journal. For Washup Plumbing, explanations are not required. I mean, there's nothing wrong with using the 5-step transaction analysis as presented in the textbook. Okay, that's written down. If that's what makes you most comfortable, feel free. I did not learn the 5-step transaction analysis. I learned by mimicking, and then the journal entries because I actually learned on the job. Okay, I didn't have any accounting experience behind me or bookkeeping experience behind me. So I learned on the job by somewhat copying journal entries, but then I developed this thought process that I go through as I learn the theory. So I'll be making the journal entries and just working through it through the thought process in order to make the journal entries. And then as you get into more and more complicated or deviant kinds of journal entries, you'll see you'll see how I go further and further into my thought process. But the vast majority of journal entries that you're going to make, are going to be affecting cash, receivables, or payables. So if you can nail those down, you're talking about 80-85% of your journal entries, become simplistic, and then that remaining 10 or 15%, that causes you to do a little bit of thinking, but still I make it you start with what you know and then you back into the other half. So there's not a tremendous amount of decision making to be made. Yes, there is that occasional entry that is just so far out there that you actually have to think through the process. You have to be able to think through, why is this a debit or a credit? And those are difficult transactions that even accountants have to work with. But for the most part, if you get the thought process down and you just repeat it and repeat it and repeat it, and that's why we have so many exercises here on making journal entries, it becomes quote unquote, internalized, so that you're not thinking about the process as much, and you recognize how to just make the journal entries themselves based upon the understanding of those concepts. So with that said, let's get started here. And remember, formatting of journal entries is important. So I put the date for 1. It says paid interest expense, $1,000. So am I affecting cash? Yes. And if I'm paying, if this is my cash account and I'm paying cash, that means I'm decreasing my cash by $1,000. So if I'm decreasing cash, I am crediting cash. Notice that I'm indenting. okay, on my credit side for 1,000, and then I debit something else. Well, in this case here, it's going to be interest expense for $1,000. Notice that, just real quick for formatting, since this is the first one, debits come before credits. Notice I had a date. Notice that for debits they're flush left, but your credits are indented. And then of course notice you have two columns, okay? The left-hand column is your debit column, and your right-hand column is your credit column, okay? And of course you actually write out the words. Because I'm just doing this as a homework assignment, I'm going to abbreviate sometimes, okay? Like I'll write EXP for expense. I'll write like A/R for receivables, A/P for payables. Note payable would be NP. Common stock, I might go common stock, STK. So I'm abbreviating because it's only my homework problem, and I'm not going to write out the words accounts receivable when I could write A/R. I'm just saving myself some time. Okay, so, and also notice that when I'm making these journal entries, if I go through my thought process, I end up backing into, like I figured out, that I have the credit to cash because that was the easiest for me to do, and I backed into this debit for interest expense. I am not going to cover the theory behind why I would make the debit to the interest expense, okay? That's covered in the introductory videos or in the theory videos for chapter 1 and 2. And that's kind of like part of the beauty of making these journal entries this way, is if you get half of it right and your debits have to equal credits, you're kind of like backing into the other half, and it's correct, although the theory does support whatever you come up with. Okay, so that's that journal entry. And I'm going to erase them as I go along. I'm not going to be flipping between slides here in order to do all of these entries. So the next one is April 5th. It says purchased office equipment on account for $3,000. So on account means on credit, all right? So I'm asking myself the question, am I affecting cash? And in this case, it's no, because I'm purchasing on account, on credit. So my second question is it receivable or payable, right? Well, if I'm doing the purchasing, that means I'm going to owe somebody else. So that means it's an accounts payable, okay? And since my accounts payable amount is here, and I'm increasing my accounts payable by $3,000, that means I'm increasing the payable, and I do that on the credit side. So I have a credit to accounts payable for $3,000, and then I have to debit something else because debits have to equal credits. What am I purchasing? I'm purchasing office furniture for $3,000. Okay, so that's that entry. If you have any questions, like I said, go back and watch the theory videos or the introductory videos, introduction to accounting and bookkeeping videos. And then if you still don't understand something, feel free to call and speak with an instructor. Okay, so for 410, perform service on account for a customer for $2,400. So am I affecting cash? The answer is no. So am I affecting receivables or payables? The answer is yes, because I'm performing service on account. Okay, and since I'm performing the service, that means I'm billing the customer. Customers are accounts receivables, and vendors are accounts payable. Okay, so this is an accounts receivable. If this was the amount of my accounts receivable, and I'm billing them an additional $2,400, that means my accounts receivable is increasing, and I treat accounts receivable the same way I treat cash. Okay, so I'm going to debit accounts receivable for $2,400, and I'm going to credit something else. Well, that something else is performing a service, so that would be service revenue for $2,400. That's that entry. Okay, notice at the time it says 15 to 20 minutes to do these. Okay, um, so just realize that I am taking longer than I would actually do it, but it's pretty close if I'm not explaining a lot of things here. So this is 412. I'm borrowing $2,000 in cash, signing a notes payable. So the first question I ask is, am I affecting cash? And the answer is yes. Because why? Here was my cash account balance, and I'm getting $20,000 more. So my cash increase is $20,000. Well, that means I'm going to debit my cash because I'm increasing my cash for $20,000, and that means I credit something else, $20,000. And that means I credit something else for $20,000. And what's that? Well, I'm signing a notes payable. All right, so I have to credit a notes payable. All right, that's a liability account. And notice that if this was my notes payable before, and I'm increasing my notes payable by 20,000, okay, notes payable is a liability account, okay, and I increase my liability accounts, the normal balance of a liability account is a credit, okay. So that's the theory behind making that journal entry, all right. That, by backing into this credit, it falls right in line with the theory. Right, 419. Sold for $75,000 land that had cost the company $75,000. Okay. Remember, transactions are like word problems, right? We're all familiar with word problems from math, and even though people think accounting is math, it really isn't. However, the way the information is presented is like it is presented in word problem format, okay? Meaning you're given a lot of information and asked to do something with it. Well, some of that information is directly related to what you need to know, to whatever you're trying to do. Some information has nothing to do with it, and some information has to be manipulated, okay? Just like in a word problem in math. And the reason why I'm talking about that is because this problem came into mind. It says here, sold for $75,000 land. Well, am I affecting cash? Yes. Why? Because here's my cash balance, and I'm getting $75,000 for the land. So that means I'm going to debit my cash for $75,000. Well, if I debit something, I have to credit something else. Well, what am I crediting? Well, what did I sell? Well, I sold the land. Okay, and there's my journal entry. Okay, it's just that simple. But the reason why I talked about word problems is because if you read this, it said that had cost the company $75,000. Okay, that bit of information, even though it's in there, has nothing to do with making the journal entry. Okay, I mean, when you get into intermediate accounting, this is a very simple transaction, and there may be ramifications as to what the cost was, okay, whether you're selling it at a gain or a loss, okay, but that's beyond what we're working with right now. We're learning how to keep books is basically what we're doing, okay, and so therefore this, if you think of it as a word problem, only this amount of this part of the information given is relevant to making the journal entry. This has nothing to do with the journal entry. And if you start trying to work on that half, you're trying to look at that information and trying to do something with it, you're going to get the journal entry all wrong. And that also brings me to the point that most students try to work with, with the last half. What they recognize land, and then they try to make the journal entry based upon the second half of the process, okay? If they try to do that second half of the process first, and if they do that, then they start to become even more confused because they're not working through a mental process that keeps you on track, and now they're looking at information here and they're looking at information here, and they get thoroughly confused and start making mistakes, okay, because they're starting with the land first. Well, notice that I handled land last. I handled cash first. Okay, and if you think from the terms of cash and then receivables and payables, the entries fall into place. If you think from land first, then it's easy to get yourself confused. All right, so follow the process. All right, 421. Purchased a building for $300,000. Signed the note payable. Okay. Now the question here is, the question I ask, am I affecting cash? Okay. And the answer to that question is no, I am not affecting cash. Okay, I'm signing a notes payable, means, for purchasing the building, I'm buying a building, but I'm signing for it with a note payable. All right, so am I affecting cash? No. If the answer to that question, am I affecting cash, is no, then I ask myself, am I affecting accounts receivable or accounts payable? Okay, and in this case here, remember this was question 1, which is cash. This is question 2, I ask myself, receivables or payable? Well, even though I'm not affecting, I know I'm not affecting receivable, and even though I'm not affecting accounts payable because it's a short-term payable account, notes payable is very similar. Okay, so in answer to that question, I would have to say, well, yeah, I am affecting a notes payable, which is identical to an accounts payable. Or you want to take, and if you say, no, I'm not affecting receivables or payables, then my question, then what I ask myself is, what's easiest for me to work with in this problem? And in this case here, that account would be notes payable. Okay, so I'm right back to the same spot, right? So notes payable is like an accounts payable, and if this was the balance it was before, and I'm increasing my notes payable by $300,000 by creating that note, well, I'm increasing the note payable, right? Notes payable is a liability account, and the normal balance of a liability account is a credit. Remember, the normal balance is what increases that category of account. Is it a debit or a credit? For a liability, the normal balance is a credit, so I'm going to credit notes payable for $300,000, and then I have to debit something else, right? Now notice I don't have to think about what the debit is. It says here purchased building. Okay, well, that's going to be something I own. If I'm purchasing the building, I'm going to own the building. So I look under my asset accounts and I look to find the account that makes the most amount of sense, which would end up being building. And that's $300,000. Okay, notice I didn't have to think about whether that was a debit or a credit. I was able to back into the right journal entry for it. Okay, the right entry for that line item, just because I know my debits equal my credits, and I dealt with what I knew to be easiest first, which was this credit to notes payable. So that's that journal entry, and that one was a little bit out of the ordinary, but not that deviant from the ordinary, so that wasn't a difficult entry. It was just slightly different. Okay. All right. Let's see here, and then the last one here, 427. It says paid $1,500 on account, right? We see on account and we automatically recognize that's either going to be a receivable or a payable because it's on credit. But don't jump to those first. Ask yourself the question, am I affecting cash? Right? Yes or no? Right? I'm paying $1,500 in cash. All right? Well, yes, I am affecting cash. So if this was the balance in my account and I'm paying out $1,500, am I increasing or decreasing it? I'm decreasing it. So that means I'm going to credit my cash for $1,500. And that means I debit something else. Well, what am I debiting? Well, I'm paying on account, right? means, if I bought something on account, so I bought it from a vendor, so I purchased it as an accounts payable. So I credit my accounts payable for $1,500 because that's what I'm paying off. I'd be receiving cash if it was from a customer as an accounts receivable. But instead I'm paying, so I'm paying to a vendor, which is an accounts payable. And notice I didn't have to think about whether that's a debit or a credit. It just fell right into place because I handled cash first. Okay. If I had went and said, oh, on account, well then one, I would have had to decide whether it was receivables or payable, and I might have said, okay, this is an accounts payable, and then I have to really think about whether that was a debit or a credit. And once I got that debit or credit, then I have to start thinking about whether it was cash, what I'm going to do with my cash. Am I going to debit or credit it? But because I dealt with cash first, I'm able to back into the debit to accounts payable without having to think about it and know that it's correct. Okay, so that's exercise 2-24. This said 15 to 20 minutes with all of my explanations, including the first 4 minutes of the video just being general babbling. Okay, I'm at 21 minutes, so I'm kind of like right on time, and even with my explaining. Okay, after if it was me, I probably would have punched these out in like 3 or 4 minutes, but that's because I have a lot of experience. All right, so bear with how much time it takes in the videos, and I will see you in the next one for 2-25.